Hey everybody, this is Tom Nash, and Palantir is hitting new highs. The 52-week high for Palantir is currently in the making. Yesterday we closed at $18.13. Right now, as you can see on the screen, the price action is up to 18.4 and it's testing new highs. What does this mean for me? Why am I issuing this warning? And how does this completely change my dollar cost average about Palantir? Now, one thing I want to explain here, and I don't like to brag, but here's something I posted on our Patreon page just a week ago. On July 12th, I posted this on our Patreon page and I told you, hey, mother lovers, this is what's going to happen this week. And this is exactly what happened. I told you it's going to go from 16 to 18 because of the things I explained here. And also told you I'm not trading this stock. I don't care. But if you were to trade this, there's a nice little profit here lying around. Of course, this is not financial advice. This wasn't either. It's just my opinion. In fact, my opinion was spot on. This is exactly what happened. So obviously, it's nice to get it right, but that's not the point of this video. Let me bring back the stock price. Now, the stock price is currently making new highs. And I care about this. Now, obviously, as a long-term investor, you're not obsessing about the share price except when it matters. And it matters in one specific area, one specific category in which it's absolutely critical for you to see, which is the new 52-week high. My system is based on understanding where the 52-week high for the stock is. Currently, the 52-week high is on the screen, $18.35. Yesterday, we closed at $18.13. For stability's sake, because we don't know what's going to happen with the share price today, let's use $18.13 as our 52-week high. And how does this change my strategy completely? Check this out. This is super, super important. I'm going to do it in 2 minutes. 2-minute stops. Now, I use a system that's called dollar cost average. I dollar cost average when the share price is high. I dollar cost average when the share price is low. But the amount of my dollar cost average changes based on the share price. Let me pull this up on the screen to show you. This was before the change. This is how the Palantir strategy for me looked like before yesterday. $17.16 was the 52-week high. And for me, 10% below that was $15.44. The green area, which is 10% below the 52-week high, is where I double down on my dollar cost averaging. The red area is anything above that threshold amount of $15.44 is where I normally DCA. I dollar cost average all the time, but the amount changes based on the current price of the share. If it's within the green zone, I'm doubling. Within the red zone, I'm DCAing normally. Now, yesterday, everything has changed. I'm going to do it in exactly 1 minute, not more. I don't want to waste your time. You're busy. I understand this. So no fluff today. Look at this thing right here. Everything changed yesterday. This is what it looked like when the trading stopped yesterday. This is exactly how it looked like. $18.13 became the new 52-week high, which means that it raised the threshold amount from $15 to $16.3. Now, currently, the new 52-week high is being formulated today, so it might change. For example, if we go to 18.4, it's going to make our threshold amount 16.5. But for the purposes of this video, let's assume it's going to end at 18.13. In that case, my red zone starts from 16.3. Anything below 16.3, I'm going to double down. Anything above 18.13 and between that range from 18.13 to 16.3 is my red zone. In my red zone, I'm normally dollar cost averaging. The point here I'm making is very, very simple. The point is that I want a dollar cost average into the stock all the time, but I want a dollar cost average more when it's below the average. When it's below the average, I'm dollar cost averaging more. Hence, at the end of the day, in 2 years' time, 3 years' time, 5 years' time, 10 years' time, my average cost basis in the stock is way closer to the bottom than it is to the top, and I haven't tried to time the market. I spent little to no time on this stock whatsoever except researching it on the movements, the technicals, no anxiety, no panic, no emotions, absolute statistical heaven, almost to the point where it's a system, it's a discipline, and you just do it almost in a mechanic way. Now, obviously, the strength of this model comes not from the DCA, which is easy. You just point a number and you say, well, 10% below the 52-week high, it's easy. But the hard part is, number one, finding these companies. Palantir isn't the only company in the world, and if you want to learn more about how to find more of these companies, join our Patreon. On the screen right now, patreon.com/Tom Nash. We teach this system how to find good companies, how to properly run your own DCF, how to analyze, how to become a better stock evaluator, how to become a better long-term investor, to find your own system, to find your own process, your discipline. Patreon.com/Tom Nash. We have a brand new academy. It's called Tom's Academy, where I teach these things. We have an absolute amazing Discord, which is a living, breathing thing where you can see everything about, what's going on in our community. I'm just going to show you on the screen real quick as it is right now. I'm not even touching anything. This is our members chat. This is our public chat. As you can see here on the screen, there's a lot going on. We have a Tesla room. We have a Palantir room. And by the way, in our Palantir room, I allowed myself to brag here a little bit. I posted this. I mean, you take the wins, you take the L's. But in this case, we definitely take the win here. Beautiful setup, changes the dollar cost average strategy completely. It's important to understand that. If you want to learn more about this, head on over to our Discord, to our Patreon. The link is going to be below, patreon.com/Tom Nash. I'll see you there. All the best, and don't forget, Palantir is the deal.